Been a hot second since you've had a market update, and there are some big stats, big facts that you need to know about what's happening today, and that's what we're going to talk about. Hi, welcome back to another Coffee with Coleman, where we love to discuss Washington, D.C., business, real estate, all that good stuff. My name is John Coleman. I'm a real estate agent here in Washington, D.C. with the Jason Martin Group. If you like data, then click that like button below. And if you want to stay updated in all things real estate in DC, then subscribe so you can sound the smartest when you're at parties and bars if you happen to be talking about residential real estate. So the real estate news out there right now is polarizing. Like, you have one set of people that have like the fury of market crashes that are creating mushroom clouds and the world ending in an apocalypse. Have you seen some of these thumbnails? My goodness. Others think it's an overreaction. It's business as usual, and maybe there's some data to support that too. And you got bigwigs like Dave Ramsey, who's got serious opinions.
That we're not going to see crash of housing prices. We're not going to see house prices crash.
In one corner, you have people like YouTubers and clickbait ad revenue, and maybe even some general news media sources that are trying to be this beaming ray of sunshine and hope to the millennials and Gen Zs that just want to buy a dang house already. They've been praying for a market collapse for some time, and there could be signs that this is abound. In the other corner, you have homeowners and investors. They own and love to see their estimates go up, up, up. And then you also have realtors who don't mind lots of real estate transactions going on and would like to see the market go up as well. Which is always a good reminder. Every opinion is skewed. And it's best to collect as much information as possible if you're going to make an informed decision for yourself. So let's set the stage for what we already know. First, interest rates, they're the highest they've been since 2008. Number two, this means affordability is tough. In fact, affordability is the worst it's been since the 1980s. You might remember that as the decade Stranger Things has set in. Number three, inflation continues to be way beyond what experts consider to be healthy, and it seems like our main approach to dealing with this is those interest rates. So with all of that said, here's the data that has caught my eye so far. So first is inventory, and here's the truth is it's always felt like there's never going to be enough inventory in our area. And I don't know if it's enough that that's going to change anytime soon. If for some reason DC area was to become super unpopular and everybody all of a sudden wanted to leave, then the market takes a hit. What we're seeing right now is the supply is still a seller's market with only 8 weeks, or 2 months if you call it, of inventory. We are still a good bit away from the defined 5 to 6 months of inventory, which would necessitate this being called an equal market where buyers and sellers have an equal footing at the negotiation table. While we're seeing houses sit a touch longer than we're used to, we are also seeing that less houses are coming on the market. With all this said, inventory is 8% lower than it was this time last year in terms of active listings. However, our next bullet is a very interesting one. Number two is price drops. They're here. We're seeing more price adjustments in a short period of time than we've seen in a minute. With 6% of listings getting reductions, we're finding that prices are not quite as forgiving as they were even a few months ago. So this means it's tougher to get places under contract. But you know what is also hard? Number three, canceled contracts. According to Redfin, 15% of contracts are falling apart. I'm like, wow, that sounds nuts. Although I don't know if the same data sets on a national level really compare to here. And reality is, if you look at the same data, last year was 12 to 13% of contracts weren't going through, which in all reality is not that drastically different from the 15% being reported. So that number does sound a little nuts. I'm just not confident that it's that much crazier than it was. And it's really hard to see that that is actually happening in our area because we're just not seeing it as far often as what they're reporting with these numbers. So maybe our area is just a touch different. I don't know, maybe. I also think it's linked to the fact that a fair amount of new construction condos and townhouses across the nation have been waiting to get done and finished in their supply chains demand, and some person might have locked in buying this place at a 3% interest rate and now it's time to close. They need to lock in their rate, and their rate is like double what it was. So now the affordability of actually buying this place is crazy, and rather than buy it, they just cancel the contract and don't go through with it. However, there's also a lot of scary news out there. Like, remember those thumbnails? Like, people are a little freaked out, and that might be a reason people are more likely to cancel their contract, get nervous, and back out. Next, we have sentiment. Only 20% of respondents in a survey by Fannie Mae said it was a good time to buy a home right now. And on the flip side, 75% said it's a bad time to buy a home. And truth be told, good or bad, sentiment actually drives our market more than almost anything else. Next is the whole recession thing, you know? A majority of experts say we're heading to one. In fact, when you're watching this, we might be officially in it. What does that recession mean for the housing market? Well, if we look at past recessions, it hasn't actually meant a huge dip in housing prices. In fact, over the past 5 recessions, there's only been one time we saw a massive reduction in prices, which was 2008. And as you might remember, if you watched The Big Short, that massive recession was actually caused by the housing market and the sketchy loans that came about for it. So I don't know if we're headed quite towards that. So it's the other 4 that we have to look at closer than maybe that outlier of 2008. So what are we gonna see in our area? Well, I wish I could tell you for 100%. And frankly, as I mentioned earlier in this video, everyone has their own bias. I'm a homeowner and I'm a real estate agent. I see myself actively on the side of hoping there's not a huge pullback in the market because I want more people to buy houses and I want my house to retain its value. However, it's increasingly difficult to ignore the thoughts in my head as I see listings make it past opening weekend, having an inbox full of new prices and adjustments and all that stuff on Wednesday afternoons. And knowing that even some of my own buyers that I've been working with have taken a step back for a second as the Fed plays whack-a-mole with their emotions by waving a hammer at interest rates every 3 weeks. That is all tough stuff, and it's all stuff I'm actively seeing as I'm working in this market. So yes, this market has cooled, but people are quick to forget that it cooled quite a bit this time last year as well. And I think that this might be even chillier, and we're gonna find out as it gets into the fall, but we're not exactly in uncharted territory at this point. So sellers that want to list high and wait for a school of piranha buyers to fight in their front yard might be sorely disappointed when the bottom feeder guppy only gets slow nibbles onto their hook. Fishing metaphors. Also, I don't have a stat for this, but I'm seeing a less rabid flipper market. This means fewer sales on the front end, but truth be told, it also means there's gonna be a bit less inventory long-term of those newly renovated property, which could come back to bite us in a little bit if we're getting back into a tight market and we don't have some of these properties coming up. We're gonna have a backlog of some of those properties that we're used to having right now because so many people have been flipping homes for people to purchase. So we're seeing some price adjustments, but homes that are priced right, looking right, and strategized right are still moving. In fact, there are still some multiple offers on properties. They're less than they were 3 months ago, but we're still seeing them on places that are priced in a way to seem advantageous to purchasers. I do think that we're gonna see fewer sales. Things will take a little bit longer to sell, and I don't think the bottom's falling out, but rather it feels like we might be actually entering one of the more normal markets that we've seen in quite some time. However, if and when inflation is curbed and we start to understand the ceiling of rates, those will normalize, and I feel like buyers will start to come out of the woodwork a little bit more because they know what we're dealing with. They know that rates are probably at their peak and will be coming down, and they'll start to get their eyes open again. Whether that's this fall or next spring, I'm not sure. So, what should you do and what should you be thinking about? So first, over the past 4 years, I've had people that I literally wanting to pray on the front lawn of houses, being like, can this just calm down already? I wanna be able to use my VA loan. I wanna be able to have a full inspection and negotiate things. I wanna be able to do things that I haven't been able to do. That's where we are now. That's what we're seeing. And while there's some fear and there's some doubts out there about what is really happening in the market, I don't know if you're ever gonna find a market where it's really easy to purchase and you feel great about it. Because if you feel 100% great about it, everybody else is gonna be running at the exact same thing as you. Number 2 is, if you plan to buy and you're waiting for the market to hit bottom, well, now you're just trying to time the market. And while if you time the market and you do it perfectly, awesome. However, by the time most people figure out the market's rebounding, well, most people are gonna figure out the market's rebounding and you're gonna be back on the front lawn with your hands praying, saying, why can't this market chill out already? Why are there all these offers? Number 3 is real estate is a game best played long term. The short game can get dicey, but the longer you own a property, the higher likelihood that you're gonna do well on it. And if I'm thinking about buying right now, that's of serious consideration of how I'm looking at doing it, because the people that have purchased 1 year and sold it the next year and made a whole bunch of cash, I don't think that's gonna be the case over the next little while. But if you're gonna own this property 5, 10 years, you're gonna be paying down equity, you're gonna be riding return on investment for the area, and you give yourself a higher likelihood of doing well on this property long term. 4th, sellers. Prices are still really high. If you look at prices right now in comparison to where they even were last year, they're higher. So yeah, maybe you're not getting the fist fight on your front lawn that you were hoping for and a bunch of offers and no contingencies, but you could still get a really good price for your house. But you need to make sure that you approach it with the right strategy. It's not just anything sells. It's looking right, pricing right, and being prepared with the right marketing. So if you want to know more about that, go ahead and reach out, because we're happy to tell you what we're doing right now to get multiple offers on the properties that we're selling. All right, so I had no intentions on going this long today, but there's just so much to talk about. And I really hope that this was helpful for you to take in some of the data and facts and stats that we went through today. If you want to talk about the best situation for you in buying, selling, or investing in real estate, reach out. I'm happy to chat and give you what I think is going on. And truthfully, next week, my opinion might change from today. So it's important that we have a real-time chat and pulse of what's going on in the market. Besides that, all the information you have today on your screen is in a downloadable thing in a link below. Feel free to grab it, use it at your leisure, and reach out with questions. Otherwise, just want to thank you for stopping by another Coffee with Coleman. Peace.